This is the Daily Market Comment by Rafi Boyajian. I'm Cristina Marujos, and thank you for joining us at XM.com. Investors were scrambling to reprice a much steeper rate hike path by the Fed on Friday, following another red-hot inflation report. The U.S. Consumer Price Index rose by 7.5% year-on-year in January, a fresh 40-year high. The two-year Treasury yield climbed to a two-year high of 1.64% on Thursday, while the 10-year yield shot past the 2% level for the first time since August 2019. Stocks on Wall Street tanked after the data, ending a two-day winning streak. The U.S. dollar, though, whipsawed on Thursday, swinging wildly in either direction, likely reflecting investors' panicky knee-jerk reaction. However, the dollar index was back above the 96 level earlier today before slipping marginally below it as yields also pulled back slightly. The big question now is whether there will be some kind of a knee-jerk reaction from the Fed itself following the ever-worrying rise in inflation. St. Louis Fed President James Bullard, who is a voting member this year, called for a 100 basis point increase in rates over the next three meetings, and also raised the prospect of the Fed holding an unscheduled meeting before March to get an early start on liftoff. However, it's doubtful whether enough voting FOMC members would support such an aggressive move. If the Fed does front-load its rate hikes in the first half of the year and also announces a faster pace of balance sheet reduction, the terminal rate might not be very high after all, and the somewhat modest jump in the 10-year yield suggests this is the view many investors are taking. If that view holds, equity markets might avoid a bigger carnage, and U.S. E-mini futures were pointing to further contained losses for today. Meanwhile, European Central Bank President Christine Lagarde once again signaled the central bank was in no hurry to lift borrowing costs, warning that a premature move could derail the Eurozone's fragile economic recovery. The euro was back below $1.14 today. The pound was largely unchanged from today's UK GDP numbers that showed a smaller than expected impact on the economy from Omicron in December. However, the Australian dollar nosedived as dovish remarks by Reserve Bank of Australia Governor Philip Lowe added to the downfall on the back of the resurgent greenback. This was a Daily Market Comment here at XM.com. Have a great weekend.